And that means we are live here, Tackle Trading's Halftime Report, a daily stock market show where we talk about, well, a lot of things outside the stock market as well, financial markets, economic news, data, whatever we're seeing that's interesting across commodities, stocks, futures, options, and Forex. And welcome out. We've got a full crew here today. We've got Matt running charts. We've got Mark doing analysis. I am your host, Coach Tim, and Cody on the back end producing the show as always. Great to have you guys. Matty, how you doing this morning, brother?
Doing better than the unemployment claims.
Yeah.
So I don't know what that means. So am I doing good? Am I doing bad? Lukewarm? What does that mean?
I don't know, man. I mean, bad news has been good news in this market.
Okay,
We've been
so
shrugging off those unemployment claims.
3 million unemployment claims versus the expectation of 2.5 million. Ooh, if I'm doing better than that, I'm doing good today. How you doing?
Yeah, I'm doing great, man. I'm doing absolutely great. There's this massive assumption with all these jobless numbers, and we're going to be talking about jobless claims and all the U.S.-China relations and all that kind of stuff that's going on. Oil contracts coming up on expiration, option expiration tomorrow as well. But it's really interesting on the jobless numbers, Mark, because there's this assumption that every one of those people are just short-term furloughed and they're all going to get their job back, you know? And so the market, the market just shrugs that off.
That's so cute. That corporations are going to look to be, oh, let me bring everybody back. Like we don't realize that corporations going to shed labor costs in this. Like, really?
They're definitely going to trim.
I mean, come on.
They're going to trim employees that they've been wanting to let go for a while, and now they had an excuse to.
They're going to use this as a way to let go, exactly what Cody said, as a way to let go people they wanted to lay off anyways. They're also going to use this as a way to go automation. No, the corporations are not going to hire the people back.
Yeah, maybe so Ted in your office who nobody likes.
Ted's dead.
Ted, this has been the excuse they've been looking for a long time to get rid of you, right? You thought you were safe. You thought that nobody likes you. You're gone.
It really is. People that expect all these jobs come right back. That is comical at best.
I'm trying to figure out why you went with Ted. Is there a Ted in your life?
Ted's dead, bro.
I would have gone with Carl's and Karen's.
I don't know. Is there any other normal person in an office by the name of Ted though? I mean, Ted's like the most guy that gets fired.
I don't know that. I don't know. I know a lot of great Teds, Matt. Lots of great people across those offices. Ted Cruz, you know, that great senator, you know, Lion Ted from down there in Texas. Yeah.
Ted Cruz. Come on now.
First Ted I can think about.
You made Cody smile on that one.
How about whoever started TED Talks? Is his name actually Ted?
No. All right, I'll go with Ted. I'll give you TED Talks, but I'm not giving you a Ted Cruz.
TED Talks is an acronym for technology, education, and design. It has nothing. There is no
it's not
Ted.
Real Ted?
No, there's no real Ted.
It's
oh
a fake
my
Ted.
goodness.
Fake Ted.
For anybody named Ted out there, we love you and we respect you. Nobody else does.
Nobody likes you. Let's just call it what it is.
Oh, it's too funny, too funny. By the way, if you're watching our show for the very first time, whenever you come in, we do this analysis each and every day. Give us a subscribe, click the bell, come back and find us each and every day. And as you're coming in, if you're a veteran, Team Tackle, put that hashtag right in the chat. Any questions, comments, or thoughts? We love getting engagement as we go through the show. Markets testing support here today. In fact, guys, I wrote about that in the blog over at the Tackle today on the website. Basically, the S&P is just at support. You know, it's very interesting when you look at it. Now, on the intraday, we went down, we held. We're only down 0.21% right now. It has not broken down yet. You've got some interesting areas that are bearish in the market, some that are bullish in the market. But Matt, the first test of a support here, pretty key level, in my opinion. What are you seeing on the chart there?
Yeah, I'm seeing the same thing. We're just testing support after a couple of days of selling action, kind of testing that 2,800 number. You are testing I would call this very minor level of support right there at 27.72. Currently, you're testing 28.05 after the market has recovered since the cash open. But I would put that ballpark. I mean, support really is a zone. It's not man-to-man defense, it's zone defense. So I'd put that right there at about 2,800. The ultimate test of support, in my opinion, though, is right there about 27.20. If you break that, you really don't have anything until about 2,400. So a violation of support right now, honestly, for the buyers out there, for the bulls out there, you're really not that concerned because really the next level of support is right there at 2,700 by 2,720. right where the 50-day moving average is, right where that horizontal trend line is as well. But a violation of that support gets a little bit more concerning, in my opinion.
Mm-hmm. Mark, what are you seeing in those charts right now? I mean, obviously the market's down for the first time 4 days in a row. And by the way, it hasn't closed there yet. So we don't know if it's going to finish in the red here. It's feeling very resilient. But what are you seeing in the chart itself?
You know, the charts are not pretty. Like, you know, the intraday charts in particular aren't pretty. I mean, if you go to like any intraday chart, you have a lot of falling intraday moving averages. You have some rising intraday moving averages. This is what, you know, whether you call it a pinch or a battle zone. I mean, if you go to Microsoft, if you go to Apple, if you go to just about any other stock, there's a lot of algorithmic battles going on right now. Mm-hmm. And so when you have these algorithmic battles where some things act as support, some things act as resistance, you know, things can go a lot of different directions. It doesn't take much to tip the pot one way or another. So these can be really, really tough for certain types of traders. They can be really, really great for scalpers on intraday charts. But I mean, this is what you have. This is what happens is you get these little pinches and battles where algos are buying at one level, selling at another, and you know, really, really messy right now. And sentiment out there, it's shifted a little bit right now. It's not as resilient. Those bulls are a little bit scared. I mean, you see that. I mean, today's price action is really, really, really interesting. I mean, you have stocks like Apple and Microsoft down a lot more than the market is. I mean, and I commented on this yesterday, is that this is a little bit strange of a market. The heat map is all over the place. You know, pandemic stocks aren't all up or aren't all down. Tech stocks aren't all up or aren't all down. It's just a really, really messy market. And that makes sense to me when you get in these algorithmic battles, is that they're buying certain stocks at one level, selling it at other, and you're seeing this on the chart. It is like red and green everywhere right now.
Mm-hmm. Yeah, relative weakness in industrials and tech here today.
Can I just say one thing real quick, T?
Yeah.
You know, Mark made a point, and I want to just comment on it. But the bulls are really scared right now. It takes 2 days to scare a bull. It takes 20 years to scare a bear. Like bears are resilient. They'll sit in their trade, take a loss because they don't believe in it. But the bulls just want to make money every day.
Mm-hmm.
This is why Ted is a bear and nobody likes him.
I'll tell you, I mean,
Ted is a bear.
Ted probably
is. Say teddy bear, like, come on, that was an easy joke.
Ted's a bear.
I didn't even get that part of the joke, but now I don't like it. You know, it was good when he was just calling him a bear, but teddy bear, no, I'm not sure. I'm on board with that.
I'm with Cody.
Yeah, I'll tell you though, I mean, it's a good point. I mean, the bulls are going to come in and see this as an opportunity. I know that they will, whether it pans out that way one way or the other. We know they're going to try to play defense down here as support on some of their favorite names on pullbacks. Now, I got to tell you, I'm seeing a consolidation below the 200 on the broad markets. Matt, you saw it on the intraday chart as you were flashing through those sectors, all bearish retracements on the intraday. I don't think it's anywhere out of the woods yet for the bulls. We have not confirmed that we've held support here by any stretch of the imagination. But I thought it was so funny. Jim Cramer was on ranting about things that he always does. And I rarely bring up his name, but I'll tell you, he said by Thursday afternoon at 2:30, that's when it's time to buy, Matt. So he said, mark it down. 2:30 is the time to buy, and starts pounding the table.
What?
Just the basic logic was
Jim
this.
Cramer is a great member of the team.
Okay, again, let's define the team. So we have presidential politics. We have who else? Mnuchin,
we got Mnuchin, Kudlow, Trump. Pence doesn't ever talk markets, so he's not really a participant. We got Jim. You know, you got Jim Cramer. We got lots of CNBC analysts. None of the smart ones. But
so you have presidential politics on your team, and you have financial news media on your team.
We got every 30.
And every 30-year-old who thinks that stocks go from 20 to 120. So you have everybody that has an incentive for the market to go up on your team.
Yes.
Yeah.
Okay.
It's a
Fund
great
managers,
group of human beings across the world.
pension managers, fund managers, Wall Street guys who are perma bulls. They're all on the team as well, for sure.
They got to chase dreams. I mean, yeah,
Yeah.
of course.
MMT backers. They're
Dude,
on the team.
the bull team's going to give it a shot here today and tomorrow. I don't know
And
what's
I
gonna
am a
happen.
member of the team. You know.
Oh, you're back?
Dude, I came back on Tuesday.
Consider a bigger flip flopper than Mark.
You know, listen, I have not been on the team for 2 days. All right. But now, listen, I'm excited. I sold a put for Tim and I's game.
Didn't I call this earlier this week that Mark was going to be back on the team?
He changes every week. So
No, I've not been on the team for 2 days when the market was going up on Thursday and Friday off absolute nonsense. We can't make it so transparent. That's what made me mad. Is we had terrible economic data. Price was rising in the face of nothing. I
You
can't
did have
support
3
that.
million initial claims today.
You know, so like, you know, but no, it's I sold another put as a great member of the team on American Airlines this morning, got $14 on a $3 naked put expiring in June, you know, doing my
You're like
part.
the guy that sits on the hill and doesn't fight the battle.
So another one for our game, Tim, $3 American Airlines, notch
You're
it
the
down.
cheerleader during the Civil War.
You know, so listen, I am a great human being who believes in manipulated markets. So
He's the drummer boy on the battlefield.
Well,
there's a lot of evidence.
America still wants to hope for a free market.
The whole thing with the jobless numbers, I got to point something out before we move past that completely. We had 3 million more jobless come in. The market finally did sell that. If you go into a 5-minute chart, that's what kind of propelled some of the selling here in the morning. Now, Mark, for weeks and weeks and weeks and weeks, the market has been buying even bad jobs numbers. Is that any kind of indicator to you that maybe the team is not liking the economics right now?
Listen, and Matt made reference to it. Listen, sentiment is shifting a little bit.
Mhm.
The euphoria when you see bull runs, they're usually really consistent. And there was a lot. I mean, technical levels for that 5-6 week period held and every. This is very choppy. This is a little bit of a spooked market. They really need something, you know, because for 5-6 weeks, hey, we're going to open up. Hey, we're going to be right now. Like there's very, very few bullish catalysts outside right now available. I mean, all of the catalysts are on the bear side, and we'll talk about this in a second with the cold shoulder war that's developing between the United States and China. But all of the catalyst and all of the sentiment right now, it's starting to shift, and you're seeing this in price action. You're seeing this now. It can shift back, but boy, it's hard to identify what it is. You know, this is where you need that well-timed remdesivir. You know, you need that well-timed something. But like, I mean, we've had Fauci and the ousted director on the Hill basically pointing this gloom scenario with the virus. You got the China situation. You got unemployment. You got Powell, who is a member of the team but didn't do a good job actually pointing to reality. We need him to lie some more, pointing to reality on Wednesday. This is a really murky, bad sentiment shift. And when sentiment shifts, all it takes is a spark to the downside, and there's downward price potential just on any spark right now. Sentiment's really shaky right now.
Mm-hmm.
Mark, do you have concern that the market, I mean, over the last 3-4 weeks, the market has not shown strength? I mean, it really hasn't. It's neutral from a trend perspective. The economic data has been really disastrous, but you're also kissing right there off the 200-day moving average. Does that give you concern?
I am like very cautious in the naked puts I've been selling this week. Trying not to get too extended, because I just really sense that there could be this avalanche, and I have my suspect of what that cause is going to be. We'll talk
I do
about
as
that.
well. Give it FXI. Let's talk about it now. I mean, let's not bury the lead. I think the most important conversation here today, we labeled our show here today the cold shoulder war, because obviously we're a little tongue in cheek on what that means. But the big spark, Mark, really, and I think was keeping you cautious, I know this from our internal conversations, is China, right? and the
China.
ongoing U.S.-China trade relationship, as well as the rhetoric out of President Trump today. Is President Xi on your team, by the way?
Oh, no, he's the arch nemesis to the
I was
team.
going to say, she can't be on the team.
No, he's the individual that could blow all this up. All right. So, I mean, we were talking internally before the show, and it's no longer a trade war. We need to get that out of the way. Now, tariffs might be used as one of the weapons, but what's going on with the United States and China right now, and I've been talking about this in the Commodities report recently. I've been, did it on the podcast 2 weeks ago. This China-United States situation is a mess. It is a nuclear hand grenade is the phrase. And when I use that phrase, nuclear hand grenade, you have any day that could happen something big. Now, right now, it's a lot of rhetoric, and the rhetoric is really, really, really building. We could cut off the whole relationship. Trump said he doesn't want to speak to President Xi right now. He's very disappointed. China slammed the U.S. in many ways. I mean, the rhetoric is getting really, really high, but it's also being accompanied with these little blows, like not funding a financial plan, like Senate resolutions that are hitting the floor. This rhetoric is weighing on the market, but make no mistake, the thing I worry about right now, and the thing that keeps me very, very cautious as a bull, is that at any time, China is going to nudge us. They are going to shoot a little shot across the bow. They're going to poke us, is the term I used when I've been talking to Tim. China is going to poke us, and it's going to be a specific retaliatory action. Now, we saw an example of what China did with Australia. When China banned 1/3 of Australian beef imports over questioning the COVID source. And so they did a little poke to Australia. Now, cutting back 1/3 of beef imports isn't this big, huge warlike gesture, but it's a little poke. And I think a little poke is coming to the United States sometime relatively soon. Now, I don't know. Is it tomorrow? Is it 3 weeks from now? I don't know that. I'm not in the inner circle of the Chinese communist regime. But from their actions, you know that this is going to happen, a little poke. I don't know what form it comes in, but it's this little version of what they did with Australia. Some little punitive measure, not a real big deal in the grand scheme of things. But what do you think President Trump is going to do when he gets poked? He doesn't like getting poked.
He doesn't like getting poked at all. No, he's going to fire back in some form, some fashion as well. His rhetoric has gone way up on China just the last few days, by the way. You're seeing it in his commentary, in his news conferences. And so
but what does Trump need, number one, to get reelected?
A strong economy and a strong market. Yeah.
A recovering economy and a strong market.
Yeah. The economy is the number one indicator for incumbents claiming the presidency the second time.
Yeah. And number one. So is Trump going to risk economics, and is he going to risk market performance on this?
Do you think Trump is going to think through any of that when China
pokes him? I think
pokes
Trump
him?
thinks about the stock market first and foremost.
Yeah. Well, but he also,
I think Mnuchin thinks about the stock market.
I'm on the thing. Listen, Trump's going to poke back, and that's going to be a horrible 2-day stretch for the stock market.
Yeah, but does it go further than rhetoric?
Yes, I believe it will. I believe it will. Absolutely. Because the Senate right now is drafting resolutions, one of them to condemn China for human rights violations, another one of them giving Trump 60 days to have China basically lay out what happened with the coronavirus, with COVID-19. And when that happens, this cumulative effect, China's going to do something. And Trump's not going to sit back. It's not who he is. It's not his nature. It's not his instinct. He is going to say some nasty things on Twitter that day. He is going.
Yeah,
who knows?
He always says nasty things on Twitter, though. You don't think China's, prone to that? You don't think they're up on that? So
I'm just saying, you don't want to be long that day in the market when that happens.
So it's a risk, and it's a speculative risk that we know about right now that could derail some of the market here on support, but we don't have any kind of proof that it's going to happen. Obviously, this is speculation here, but I do think there's some legitimacy to it. I'm seeing it more and more and more in my news feeds. I'm seeing it out of the rhetoric, and not just the subtle stuff from a couple months ago or even during the trade war. I don't know what forms it's going to come in, but I do know this: like there was some ESG, kind of investigation into all these ETFs that had some Chinese company in it, and I couldn't pronounce it. It's like an HHDT, where the initials for it. But Matt, this Chinese company does surveillance for China, and so all of these unbeknownst investors, they were investing in a company that was doing some pretty deep statey kind of stuff, and so they wanted to pull all of those shares out of the funds. We saw Trump the other day say that we're taking all Chinese companies out of our pension funds and all that kind of stuff. So I don't know what form this is going to take, but I'm seeing the rhetoric get ramped up, and maybe he thinks he can throw a shot over China, in terms of rhetoric and ramping it up a little bit, and then come back and have it recover. What does Trump love more than a recovery story, right? He derailed it on the trade war, then we bring it back and we get a resolution, right? He's willing to go real high on the rhetoric and then try to come in and be the savior. I mean, is one of his playbook 101s, isn't it?
It is. Yes.
Yeah. So obviously China has some risk here, and Mark, you're more concerned about it, and I'm with you. I don't know if it's a good play one way or the other, but it's definitely a risk in the market.
Tim is very accommodative since I joined Team Bitcoin on anything that I say. He's like, now that you're on Bitcoin, listen, I feel like real brother kinship to you for the first time in a long time. So yeah, sure, I buy it.
Give me a peek at XLY if you can, or even RTH, Matt. Not fly, but XLY, discretionaries or the retail holders, one of the two. Okay. Fly fair. There we are. All right. There was a ruling out of Wisconsin here over the last couple of days here, guys. I think it happened yesterday. 4-3 ruling that the Supreme Court of Wisconsin ruled that the public health order to keep people at home was unconstitutional to their state constitution, and it was overreached by the government. We're seeing this movement more and more and more and more. Discretionary type companies, Mark, sitting on support here, but we're going to see a lot of this. And their stay-at-home order was only for another 2 weeks. This reopening theme, this reopening phase is continuing. Mark, what are you seeing out of those storylines, and what's your interpretation?
Well, listen, it's fueled one of the main things about the bullish rally has been the reopening, right? That we're going to reopen, it's going to get back to normal. The reopening push is happening. It's broad scale. You see individuals protesting, like when California, when the LA County, I don't know if it's LA Mayor or LA County, I don't know which one, I might be getting those mixed up, but the health department officials said, hey, we're going to be locked down through July or maybe into August. There was huge blowback, and immediately the mayor came out and said, no, listen, it's not going to be that long. People are tired of being at home. The push to get open is going to happen. Now, once again, this is not a should they, shouldn't they. When you're analyzing the stock market, it is very important to try to analyze what is, not what should be. And that push is there. And so there is a broad scale push. And I don't know if that's bullish for the market. I don't know, once the economy gets open, what nonsense is the bulls going to have to focus on? Because then maybe for the first time, if the economy is open and things are broad scale open, they have to then maybe look at economic data for the first time. And that's not a bullish argument, right?
Mm-hmm.
Hope is a great bullish short-term catalyst. Reality, that's a whole different story.
Well, it's the entire buy the news, buy the rumor, sell the news.
Mm-hmm. Very much. Oh, it's on a massive scale. Absolutely.
Yeah.
Absolutely.
Yeah, and that assumption that Team Bull has had for a long time, we'll see if that actually ends up coming through to fruition here as the markets are testing these ranges. Let's keep moving. Go ahead.
Very quickly, the reality is, in every sector in the marketplace, we're seeing the same trend start to develop. We're seeing double tops, double bottoms. You look at discretionaries right here. double top right literally at the 200-day moving average, double bottom right there at 110. You're seeing this across the board.
By the way,
you're seeing reversal patterns across the board right now.
Oh, 100%. That's an M pattern on the daily candlesticks. Now we haven't broke down yet. There's no confirmation, Matt, but that's a change in momentum and trend, on so many charts. Industrials, in my opinion, is probably the weakest, at least my assessment of it, because you had that breakdown off of those ranges in that little cluster.
Yeah.
Just weakness. I do want to acknowledge Beth Salamanca's comment here. Beth was a Marine. Back on the China thing for just 1 minute, Mark.
What's up, Beth?
Beth,
love you, Beth.
Yeah, great to see your name in the chat there, Beth. Great member of Team Tackle. U.S. Marines have been directed to shift their strategy from war on terror to war on China. Just saying. And Cold War is a prelude to hot war kinetics. Interesting.
Listen, the China thing scares the living crap out of me on multiple levels. I didn't think that the virus, I didn't think in 2020 anything could scare me more than the virus. But the China thing over the last couple of weeks, both from a market standpoint and a student of history, because what Beth is saying there, listen, a hot war in some form is something obviously we never want to see in our lifetime. I don't know how to understate how nasty the rhetoric I'm seeing from the hawkish sides. Peter Navarro actually used the word war. We are at war with China. The hawks on the China side, they're using the same type of rhetoric. Listen, now hawks on both ends, they hate each other right now.
Mm-hmm.
It is nasty, nasty, nasty. You've seen certain military exercises coming out of China that are very provocative in the region, pushing their metal, so to speak. None of this is good. The China thing, absolutely, like it cannot be discounted in your investing decisions. Now, that doesn't mean we can still trade, right? The whole world can be in World War III 3 months from now, but a trade is a trade and price action is price action. Talking to the investors out there. I'm talking about people that are over leveraged. I'm talking to people who aren't using proper money management. This situation, when it happens, this market is already on pins and needles and very, very tentative sentiment.
Mm-hmm.
This is the type of thing that can make you retest lows in a real quick hurry. Be cautious. Be cautious.
Isn't that Cold War 101 though? China blasting Australia instead of us from an economic perspective.
Well, they're going to pick on like Australia.
I mean, they're not going to come at us directly. They're going to come at allies.
I think the rhetoric on this thing is going to hit levels that we have not seen, which is one of the reasons, tongue in cheek, we use the cold shoulder war. A Cold War is where you're actually worried and using hot war tactics to scare the hell out of each other. I think the rhetoric aspect of this thing, we've only gotten started on this. Like, I think it is going to get really, really, really nasty.
That's not something I want to see, and I hope not. I know hope is not a strategy, but we'll keep monitoring it. Obviously, guys, still early in that. Let's move through the markets here as we keep working down the list. Crude oil next here, if we can. Crude oil actually very resilient today, up 6%. I saw a thing out of the Commodities and Futures Trading Commission I thought was very, very positive for crude, for June, for a lot of this in general. They basically said to the exchanges, guys, you are responsible for orderly trading. We know that expiration is coming up, and it almost read like, do not let that happen again. And I'm sure in so many words they were saying that. Mark, crude oil actually showing me a little strength here, 6%. Matt, we are breaking that range a little bit. Matt, the chart first, then Mark, the fundamentals.
Well, technically here, we've been talking about this range for days and days and days now, right there between 23 and 26. And you're breaking out of that literally as we speak. You're breaking out of that range. So technically speaking, this is a buying opportunity in my opinion.
Mm-hmm. Marky, what about you?
Listen, the fundamentals of oil are the best they've been in 3-4 months. I don't look for rapid price appreciation, but if you can find ways to play it via stabilization, I think that's what the next 4 or 5 months have in store. Very stabilized prices. I mean, that's how I'm playing it. You know, find ways to play it through stabilization. You're not going to see oil jump up. You still have storage capacity issues that need to be drawn upon. You still see a rig count that is declining, but it's going to start leveling off. I mean, so there's still inventory issues that really, really have to be drawn down on before you see oil skyrocket.
Mm-hmm.
But I love oil right now. I love plays. Most of the plays I'm doing revolve oil in some form or fashion. Now, I don't like the producers at all. I don't like chasing the stock prices because they still don't make money at oil at $30 a barrel. Like that's not a robust. Stabilized oil prices doesn't mean that your Oxys and your Chevrons and your Exxons in the producing part of it, that doesn't mean they're having bullish days. It just means that the nightmare scenarios are over.
Mm-hmm. Mm-hmm.
I mean, the one concern here is there's been zero participation here.
Oh, there's no volume.
Zero. There's no volume behind this. And that's to me, that's the biggest concern, that you haven't had any volume support this.
Yeah. Well, but I think that
they jacked up margins to like $8 gazillion a contract.
So people aren't trading that right now. And also the people who held the June contracts have rolled them probably, but there's no participation. It is a very, very good point on that technical. Natural gas testing support, Mark, you want to talk about this one today as well. And obviously, I mean, we had the failed breakout, went up and hit the 200, tested that, came all the way back down. Now we're down at this 168 level. Marky, what are you seeing in nat gas?
Once again, like nat gas is a little bit of a roller coaster, and my way of playing natural gas is sell those naked puts or acquire shares down low of UNG, sell the spikes. Once again, this market punishes the greedy. If you get a 3-4 day move in your direction and you're like, well, I'm going to go for a gazillion-dollar trade. Listen, you are being punished in the last 6 weeks. You really are. As a swing trader, like this whole market everywhere is really, really quick. Everything is elevated. ATRs are just huge, almost across the board in everything compared to where they are in historical standards. Be happy making a little bit of money. Love the fundamentals of natural gas moving forward into 2021. Like the stability, like the sell-off. I had a naked put at 11 on UNG expiring tomorrow. I was hoping to get put, but we're having a little bit of bump. Thinking about buying some shares outright. I'll think through that through tomorrow. But I like natural gas at the lower levels here. I do, as a long-term play.
Gold and silver next, if we can. Actually, silver, I think, is going to grab everybody's attention a little bit here. Gold making a nice little rally, found support, held support, popped back up. But Maddie, I think silver might be testing a little zone here. And if you go back to that daily, that 16 level feels like almost a little bit of a breakout. I know you got the 200, you got all these other stuff, but reversal characteristics in that trend. Matt, what are you seeing in that silver chart?
I love silver above 16 here. I love the price action we're seeing today, up 2.93% on the day, near the daily highs, breaking out of that $16 level, target 17, obviously 200-day moving average right there. But silver showing some real good strength here.
One of Mark's biggest fears, and I know this, Marky, is that you feel like you're going to miss the run in gold because you haven't been playing the equity directionally.
I've missed every run in gold. All I do is sell naked puts and they expire worthless. Now I'm going to be stubborn, and that's what I'm going to do because it's who I am.
You should buy
equity. We all love gold. We've loved gold for 14, 15 months now. Pro members have heard us talk about gold incessantly and the reasons behind it. The only thing that makes me mad about gold is when I hear individuals getting fearful when it goes down for 3 days, and that's annoying. So if gold goes down for 3 days and you're worried about that, then you don't really believe in gold. The gold thesis is as fundamentally strong as any thesis I've ever seen on almost anything in my entire life. It is rock solid. Now, my lame ass is going to continue to sell naked puts at lower levels because I have a system that I do. It's how I approach. I can't sleep at night if I don't do it that way. but I worry that I'm going to get left behind and make a little bit of money instead of a lot of money.
Well, I mean, there's a lesson there to everybody out there. And by the way, trade your system. In fact, in the chat here, guys, if you're watching right now, just type in trade my system, because you can't just start breaking your rules out of FOMO, Mark. I mean, you've been around this game too long. Matt, we've been veterans of this for a long time as coaches, mentors, and everything. System-based rules are important. Now, I understand FOMO is real, and there might be opportunities for you to do other things with this, but I'll never, ever criticize a trader for following the rules, Matt.
No, I can't criticize that either. But when it comes to gold, you want to own gold. You want to own gold for the economic reasons, for the political reasons, for the behavioral reasons, for every single reason you can potentially put out there. You want to own gold. And like I said, a couple of days ago on the halftime report, and many other days, gold does this. It stagnates for a time period, and then it just drives. You don't want to miss out on that freight train.
Dollar next, and I'm trying to find the exact tweet out of our president, basically saying that we have and want a very strong dollar. That's exactly opposite of what the rhetoric was, for the last couple of years. In fact,
he didn't say that last year.
He did not.
He didn't say that the year after. He didn't say that the year before that. He's never said that. He wants a weak dollar. In his heart of hearts, he wants a weak dollar. Yes. But saying I want a strong dollar does play politically.
So let me get this right, Trump. And Trump, I don't hate you as much as many as some. There's many issues. I agree with you, and you are the leader of the team. But let me just give you an Econ 101 lesson, right? You can't have negative interest rates and a rocket high strong dollar, okay? You got to pick the side that you really want. So,
Cody, what was this all about? Because this is a pivot. I know that you track this kind of stuff, obviously, a lot. What was he trying to say?
I think it's political. Just because, all of his policy, rates, everything that's going on there, he wants a weak dollar. Weak dollar floods the economy and floods the market with extra cash and cheap capital. So that's what he wants. So he usually doesn't want a strong dollar, but saying out loud, I want a strong dollar is a political move.
Dollar is pressing up against resistance, Matt. The index, you got a little range there that we've been in for a couple of weeks. If it breaks out, that would trigger an upgrade probably in the ranking. We're not there yet. Quick peek at Bitcoin. Again, pretty resilient after that, the halving that we talked about on the podcast on Monday. Over the weekend, Bitcoin came down on a big red candle, weekend gap kind of thing. Now we're back up. We even tested 10K here today, guys, and 10K, in my personal opinion, is a very important resistance zone. Mark, what's your read on just the Bitcoin situation right now? You're a sentiment trader. We don't have to rehash the discussion we had yesterday, but what's your read on Bitcoin?
I was going to say, how mad do you want me to annoy Matt today? You want me to slightly annoy him or go full on annoyance?
Bitcoin's gold. Say that. Just say that.
I feel like I'm in a movie where you're in the Western town and the guy says, say it one more time. I dare you. How I felt. Say it one more time.
I'm the guy saying, say it one more time.
I know, right? That's what I'm saying. Is that I feel like I'm that. Listen, Bitcoin's not gold. The thesis on gold, we have empirical evidence on how gold behaves for decades.
Centuries.
And so listen, the Bitcoin, Team Bitcoin, it's up there. That's all I'm going to say today.
Yeah, it's sentiment play, and obviously
it's a sentiment play.
10K would be an interesting breakout, Matt, just technically speaking.
A breakout of 10K is absolutely tradable. 100%.
Yeah, in my opinion as well. And guys, that's really on the top down side of it. We're going to be moving into our next section called Stock Talk, where we talk about individual companies that have caught our attention, that are in the news, that are grabbing headlines that we feel like is very interesting. By the way, if you're watching our show right now for the first time, give me a thumbs up, give me a like, a share, and click the subscribe button, click the bell, come back and join us each and every day. Tonight for pro members, we do have our cash flow club, and we had a great webinar last night. I don't know, did you guys get a chance to see that webinar last night with Coach Noah here on YouTube? It was on the options
I was in and out, but it was an amazing webinar. Noah did a great job.
Yeah, if you know our stuff and you haven't seen the replay on that webinar, give it a save and go and watch that replay at some point here over the weekend or tonight or something like that. I think you guys will get a lot of value out of it. Great job, Coach Noah, on that. Let's talk companies here, guys. I want to talk about several of them. It looks like the Uber deal is going forward, Matt. They are going to buy Grubhub, and the market kind of likes it, and we've seen them trying to position themselves in a better way for this Eats and the delivery service on that. Is that a good deal for them, by the way, you think, guys? Consolidating, getting some of the competition off the board. They're going to be paying premium, more debt here, Mark. Any interest in Uber? Are they on the team yet?
It's like dating a twin sister that absolutely causes your life to be a living hell, and then saying, I want to date the other twin who's just as bad. So Uber's
I never get Mark's dating scenarios. I never get them. Maybe I've been married for 20 years, but I never get them.
Basically, my point is Uber Eats is a cash burn and Grubhub is just going to add to that cash burn.
That's what it feels like to me.
Listen, if we were living in a permanent pandemic world that lasted for the next 15 years, it would make some kind of sense. This seems like a childish move with someone that is desperately trying to find something that works in a failing business model. It doesn't feel like a move out of strength. So now give me Lyft over Uber 100 out of 100 times right now if you want to play the rideshare play. So.
I just literally just Googled while you're talking. How much does Uber lose on Uber Eats? It's estimated they lose $3 on every order for Uber Eats. Why are they doubling down on this space, Matt? Is it just that they're a believer in being a debt-driven company? They're going to run and run and run, and they have to do it. I understand, I guess. It's strategy, but you're talking about a company that loses money, that's buying another company that's bleeding cash as well. I'm not so sure this is a good one.
Not analyzing the deal at all, but again, Uber, many other companies like this, they lose money. They do. They're debt-driven companies. It's no different from Amazon. Amazon was a debt-driven company from 98 till 2015. 17 consecutive years it was a debt-driven company. This is what growth companies do. That's what you're betting on. You're betting on the fact that they're going to be profitable at some point in the future. Now, is the debt so far that Uber can't overcome that? That's the open question. But going into debt to buy another company, that's par for the course when it comes to these types of companies.
Yeah, that's what they do. And by the way, Adam makes a good comment. Didn't California pass a law that limits the delivery fee? I think it was New York City. It might have been both, Adam, but I did read that New York City did just pass a law that any delivery type company can only add a certain percentage above the order to actually charge as a fee, and some curbs on that kind of stuff. So interesting.
And I do agree with Chuck here. Not Chuck, but Chris Knock. When he says, if I was an Uber executive, if I was an executive in any capacity in this deal, I would immediately sell my shares and take the profit.
Yeah,
immediately.
Yeah, I agree. I agree with that part of it as well. Next one I want to talk about is Goldman Sachs or Wells Fargo. And this is so funny to me. Unsubstantiated rumors, Mark, that made headlines across many sites here today, which caused a surge of 8% in Wells Fargo off the bottom, that Goldman Sachs and Wells Fargo are going to merge. Now, this came out of some Fox business analyst and has no basis in fact yet. Now, it may happen. We don't know. But this is definitely the kind of engineering that Team Stock Market likes to do, right?
It is. Listen, we are all about manipulation, rumors, innuendo, anything to help drive up the price of any area of the market whenever we can. Listen, Wells Fargo, remember there were several years ago, right, that Apple was going to buy Disney, stock market people love to speculate on what they think would be really, really cool. And so you'll hear these things all the time. Twitter gets rumors about this, that someone's going to buy them, right? These kind of things are par for the course. Wake me up when there's an ounce of credibility to it. So
yeah, well, the market's buying it.
We've heard that for years and years and years. Just this XYZ company wants to get bought out. Maybe it's Twitter, maybe some other smaller company, but we're not talking about that. We're talking about Wells Fargo. one of the biggest banks in the world getting merged with Goldman Sachs.
Yeah.
Astonishing.
It just reminds me of the Apple buying Disney rumors. So,
yeah, and I don't believe it in any capacity. I'm with Mark on this.
It's given us a relief rally in financials for at least one day, which actually I think is helping the broad market find some support, because without the financial rally here, guys, I think the market would be down more, quite frankly. If you look at XLF coming back off of that breakdown, that chart's not anywhere out of the woods yet, though. It's that's even to say the least. I mean, you got falling moving averages, a breakdown on support. Yeah, green candle on some rumor here today, but we'll see. We will see.
Goldman Sachs buying Wells Fargo has to go through regulatory pressures. It has
take
to
a
go
long
through
time.
the FTC. It has to go through the SEC. It has to go through the government. This is not one company buying another. This is one of the biggest companies in the world, financial companies in the world, buying another company, creating perhaps a monopoly. So one day rumor does not make news.
Mm-hmm. Abbott Labs here next. I want to get Cody in on this one if he can come back in. I know Cody had a little Wi-Fi issue there for a second. They have a coronavirus test, and they came out today, Mark, and basically said half of the tests that we went back and double checked gave false negatives. So tests that said you don't have corona.
Terrible thing to hear.
What happened there, Cody? I mean, what does that mean, by the way, a false negative?
So a false negative means that the test failed to pick up that the virus was present or the antibodies were present. I haven't looked into this. I saw just the headline, but I haven't dug into it. But if they're getting false negatives are always worse than false positives, because that means you're actually missing the presence of the virus that is there. A false positive is when you say it's there and it's not.
Isn't this one of the problems, and I'm not even talking from a market standpoint here, about the rush for anything, the rush for treatments, the rush for tests, the rush for a vaccine? Like, I mean, I'm not an anti-vaxxer, but I can tell you I'm not going to be first in line for any new vaccine that's rushed through. I mean, I'm going to wait for all, millions and millions of y'all to see what happens with that before I jump in line with that. Because I mean, I'm not a scientist, at least not a medical scientist. And like everything I know about the scientific process this is what Fauci says all the time. It's like, this is a long process, right? This is a long process. There's a lot of things, that you have to go through. So I guess it doesn't surprise you that a test that was rushed out isn't working.
Mm-hmm.
You're going to get the vaccine, Tim?
Well, I mean, here's the thing. Novartis and NVS, next one, it ties right in here, Matt, with the conversation. Novartis says they don't know, N as in Nancy, NVS. They were saying they don't know if we'll have a vaccine till the end of 2021, and if then. So there's all this. I mean, we talked about this on the podcast a month ago. We know the healthcare rumors are going to spark short-term relief rallies in the market. People love hearing, oh, well, they're working on these trials, or they're working on this testing, or we have this or that or the other thing. But then I'm starting to see that sentiment and conversation change out of companies, Mark. This is a huge company out of Switzerland.
It never came out of companies.
Right.
It came out of politicians who want to have politically motivated situations. It's never coming out of the companies. The companies are actually the ones saying, hey, hold my beer. Let's give this a little bit of time here.
Yeah. And to answer your question, Mark, yes, I would get a vaccine. I am very much a believer in vaccines.
I would not get a vaccine.
But the first round of vaccines.
Initial.
I'm saying first round of vaccines.
Yeah. Don't get me wrong.
I might let somebody else go first.
Let's hold a poll here real quick. Of the 150 people watching this show, how many of you would get a vaccine the first initial trial?
And let's say one that comes out like 6 months from now, which is like ridiculously short.
No, I want to do it. I want to do it.
Yep, I want to do it either.
Put my family through it. No.
The first go.
Tim, I like your daughters. How about you go get that vaccine and let them wait? All right.
According to the halftime report, Tim would be the first person in line.
Yeah. So this medical science takes a long time to get it right. It's best guess. It's a slow process, right, Cody? Like you know about this stuff far more than I do.
Normally the way that these type of treatments have to go through is they go through 4 phases. So
Johnny makes a funny comment. Bill Gates should take the first vaccine.
The normal process of pharmaceutical or vaccine or anything of that sort is the phase trials. And each of the phase trials usually has a number of data points that need to be required, a number of times it's been retested. So your phase 1 is when it's still in vitro, which means in the dish, in the lab, where you're testing it and you're just running the different analysis to see what it's going to react to. Your phase 2 is when you start going to something like mice or monkeys or some animal model. Phase 3 is a small human trial, and then phase 4 is a large human trial. And in order to go from each of these phases, you have to have a lot of paperwork and a lot of approval and a lot of peer review of the research and the data that you're showing to even move through these phases, which is why it normally takes, let's say a new pharmaceutical drug that's supposed to cure something can take decades to actually make it all the way through and out.
Cody, I've watched Contagion. The first 13 monkeys died.
Exactly.
See, I haven't seen Contagion. Yeah, maybe Contagion will sway me. By the way, here's an obvious point then. If nobody's getting this first vaccine, why do we care about the vaccine news? Why is the team market always hyping up these stories, Mark? If first of all, it's not tested.
Once again, that's what we do, right? Like, listen, once again, shut off your rational brain. Reopening, economists saying, hey, we've bottomed out. Therapeutic treatments, vaccines.
You might as well just say buy. They might as well just repeat that constantly.
Well, that's what the analysts were saying here today, Matt. In fact, I saw upgrades out of Wendy's. Okay. In fact,
why Wendy's?
It's what I've been talking about for the last couple of weeks. There is a strong sentiment push on anything with a drive-through. Anything with a drive-through. I mean,
they like Wendy's. Upgrade on Netflix, by the way. Netflix got an upgrade out of Jeffries. Buy rating, even up here at the high. I get it. Survey Monkey, SVMK, had an upgrade. I'm seeing buy out of a lot of the Wall Street firms, analysts, and people who are on team stock market, obviously, that want markets to go back up. So the short-term euphoria is still in the sentiment, in my opinion. I know we're at support, but until it breaks down, until you actually get a catalyst, let's not start calling things bearish yet. There's still that underpinning of stability in many.
It's not bearish yet, but the sentiment is starting to turn that way, though.
I'm feeling a shift too. I'm feeling that shift too, but it's still a little too early to confirm that. Is all I'm saying. By the way, this one will trigger you a little bit here, Matt. Chipotle had a price target raised to $1,100 a share. At Piper Sandler.
I mean, let's look.
Amazon, why not?
Let's look at how the ETF's doing today. Bitcoin up, Chipotle up, Goldman Sachs up, Beyond Meat's up.
The Chipotle thing I don't get. Still do not get. But that chart, I mean, guys, we're almost pressing into new highs. Analysts are momentum traders, always late to the party. They're going to have to upgrade when prices go up because they always want to have a higher target than when the current price is. So it's always a delayed reaction. It's just crazy sometimes to me when
the average PE ratio of the anti-mat stocks is like 145.
It's true. Yeah.
Oh, we need to find something that's even worse then. Let's get some only 145. I'm shooting for 160.
Boeing has a negative PE ratio, so you got to factor those in as well. Next one, Tesla. I know we keep talking Tesla, but frankly, it's one of the most important things going on in stocks right now, in my opinion, this reopening. Tesla, Elon Musk sent a letter through their HR department, Mark, to their workers who were furloughed and said, we are going to start calling you back into work. Now, be aware that if you choose based on your perception of the risk to not come into work, we will not penalize you. You can come back in when you're ready, but this will affect your unemployment claims because we are giving you qualified work. This is going to be a growing theme here, Matt, as the reopening happens. A lot of the jobs numbers we're seeing and all that kind of stuff, people who are furloughed, they're going to be kind of losing some of that short-term cushion they've had with unemployment. leaving workers in a position where they got to choose, okay, do I go back to work, or do I worry about my health? I mean, I think a third of the country, half of the country still is not ready for a broad reopening. I saw data on that it was at least 50% of the people. So I'm seeing tension between workers and management going to be rising this year. I don't know what it means for stocks. I don't know what it means for markets, but I think this is going to be a continuing storyline. Mark, what are your thoughts?
Listen, I mean, there's going to be a strong workers movement. Now, how much traction it gets, right? Now, if the coronavirus starts to fade off and there's not a fear and there's not a second wave, it's going to die out really, really quick, right?
Mm-hmm.
But I mean, it depends on the virus. If the virus is something that's with us and is a constant thing for a long time, I think you're going to see unionization movement gain strength. But it all depends on the virus, as so do so many other things. Market getting euphoric. It's getting a little excited.
Yeah. What's the market doing on the intraday?
I mean,
It's popping.
SPY's up 200 for the first time all day.
It is holding support, at least on the intraday right now. SPY is up 10 points.
There is zero chance a pro-union movement in America in 2020 actually works.
I don't know, man.
It depends on how many people are dying in plants.
Really?
Yeah.
Just think about the episode of The Office where the workers were going to do a pro-union movement, and the woman comes down. I can forget her name at the time, but she comes down and she says, "If you union, we fire you all."
Yeah. Well, the one thing that trumps that is death. So like
but the mortality rate is not disastrous. We're not talking 25% of people who get the virus die.
I know, but
less than 1%.
Listen, outside of the meat plants, there are starting to be protests with signs says, your meat is not worth my parents' lives. Like, once again, if the virus goes away, the union movement dies. If it doesn't go away and it's consistent and there's a stronger second wave, absolutely.
I get that, but that movement is not done by pro-union people. That's not done by workers. That's done by political operatives. So I just don't see how the pro-union, and again, I speak as a pro-union guy, but I don't see how that works. I don't think the American populace has the stomach to really deal with that. I mean, you got to go without work for weeks and weeks and weeks and weeks.
Dude, Jimmy Hoffa is going to come back from the grave with a steel pipe and start beating on people. So,
again, I would watch that movie. I would watch that movie, as would other Americans watch that movie, but it's not going to happen in real life. It's just not.
It depends on the virus. Listen,
workers have been working for starvation labor for 40 years.
Yeah.
You think workers are just going to all of a sudden unite?
If they're dying, I do.
Well, I mean,
I don't even think death could get them to come off their labor.
Could be money. I mean, here's the thing. Go to Amazon.
Corporation's going to offer more money. Is that the argument?
Less. They're going to take away benefits that they were starting to give.
Well, that goes to my argument.
Amazon today came out and said they're ending their wage increase in June. So during the the time of the lockdown and whatnot, they gave people a wage bump and said that if you're going to work under these conditions, we're going to give you more money. They said they are stopping that June 1st, and we're giving 2 times overtime, and they're getting rid of that in June.
Again, all of that goes to my argument.
I don't know. I think it might also feed into the other side of it, because if a worker's like, you're going to
go back to work because they need the money, right?
Well, yeah.
Okay. Yeah. So whether Amazon offers $13 or $15 doesn't matter if it's a union. They're going to take what's offered.
Well, I don't think Amazon has a union. I wondered why not, by the way.
This isn't the 60s, guys. I mean,
dude, I think you're going to see a movement back to workers on this, and a progressive movement.
I would hope that. I would hope that unions are strong and productive and fight for workers' rights. I would hope that. But to say that the unions are going to come back because of this pandemic, I think that's foolish.
It may not just be unions, though. I think it might be workers' rights movements. We saw it in the Democratic bill, right, that they're proposing right now.
You have more people literally protesting. And I'm not saying more people. I'm saying 10 times more people protesting opening the economy versus any union discussion. hardly nobody's talking about unionizing and workers' rights. They're all talking about, I need to work to live.
Listen, the populist movement in America has been growing strong for years now. All it takes is the right personality and the right set of circumstances to.
Yeah, but the populist movement is talking about, I need to work to live. They're not talking about workers' rights.
It all comes down to the death. It all comes down to the virus. Like, without it, I agree with you completely. It would take but if you have a stronger second wave, and let's hope that doesn't happen, right? Because
people have been weak against corporations for 4 decades now. This isn't going to change that.
Well, then that sounds like a good member of the team talking right there. You know,
Matt,
I am always a data-driven analyst. Always.
So.
Yeah, let's take a look at Tyson Foods, by the way. You know, those pork plants, those meat factories, all that, they have been kind of hit some of the hardest. TSN, actually, if we can. And Mark, Tyson, they came out and said that they're going to cut beef prices by 30% on their side of it. That should help farmers. Is this a good thing for a company like Tyson when they're going to start curbing the actual price that they sell the meat at to help their distributors, their farmers, and all that other kind of stuff? I mean, any reaction to that?
It's a strange headline, and it's one that I'm still trying to wrap my head around a little bit. It's a strange headline. I don't know if it's a PR move in the short term. I mean, it feels very PR-ish.
Yeah.
Like, to me, like, so, I mean, at the end of the day, Tyson still has to make money, right?
It feels like a kind of a PR type of thing, you know, goodwill from a corporation. We know that rising costs are affecting Americans and all that. And I think it really probably might be coming back to the beef producers. People who raise cattle, I mean, cattle prices are not very good right now. Just because you see inflation at the grocery store doesn't necessarily mean that you get great prices at the actual farm level. In fact, cattle prices were way down for the year. They were at 130 start the year, about 93 right now. I don't know.
Really at right now, futures on that.
They've been relieving back up a little bit here recently, but I know a lot of people are concerned about inflation and food prices. So a Tyson Foods who comes out and says, we're going to cut some costs, might just be good investor sentiment and whatnot. Delta Airlines, one more here for me, Matt, maybe two. The airlines are interesting down here today, Mark. You're at the lowest price ever, you know, not ever, I should say, but in some time on Delta. Delta came out and said, we are retiring 18 of our big 777 planes. They're not fuel efficient. They're not as easy to run. And we're going to put them out into the pasture, so to speak. Airlines are still actually kind of finding some resiliency even after a breakdown. Mark, I know that you were looking at AAL and you have some interest in the airlines, but I'm still seeing extreme weakness across the board. I'm on the complete opposite side of where you're at on this. What's your read on airlines?
I only have interest in any distressed companies at ridiculous bargain basement prices. I mean, the $3 put I sold on AAL is like, oh, well, if AAL goes bankrupt, I lose $285 on those 100 shares. It is the type of bets that I've been waiting to make, just starting to get prices, and I continue because there's a lot of downward pressure possible. You know, it's this bet against bankruptcy. It's a bet against total disaster. That's all it is. I mean, the airlines are going to be not the most robust place to be for a long time. It's hard to see air travel. I mean, they're a nightmare. So don't get me wrong. I wouldn't buy at these levels, but strategically, I think Delta at 5, if you can get a $20 naked put, you can't today.
So if you get a 75% discount on today's price. Okay.
Yeah, basically, you know. So, right. But that's how I think, right? Like, it's like
Mark sits there and he tries to like say, I'm the leader of the team.
I know. I said I'm a member. I'm not so vain to think I'm the Trump is our leader.
He wants to see a crash in prices is what he really wants to see.
I always want to see a crash in prices. I want to see a crash in prices. I want to see a crash in prices because it allows me to do things that are in my risk management realm of doing things, right? I want to see Clorox down at 150.
All I'm saying is you can't be the cheerleader of the team by doing that.
Well, but I need the team I need the market to go down, but I want it to go down in an orderly way. You know,
Right.
that's what I would like.
That way you are a good cheerleader.
So I mean, I would love to see gold down. I mean, the things I love, I would love to see silver down. I'm going to sell naked puts and hope it gets there. And if not, at least I get paid a little something.
Mm-hmm. Mm-hmm.
You know, that's how I'm approaching. I mean, I'm not buying anything.
I'm not saying you're wrong.
You know,
I'm saying you're not a cheerleader of the team.
Listen, but it's funnier when I am. So listen,
True.
Anybody that attends my weekend shows knows, like this weekend on the prep class I do on Sunday, I spent the first hour talking about the 21 bearish arguments facing the market. You know,
Yeah,
so,
I covered that for 5 minutes in the podcast.
You know, like it's like there's a ton of all the bears have all the best arguments. I want to go long. I'm a bull. I don't short. I don't buy puts except maybe as a protection mechanism against long positions. I'm a bull. It's who I am. I couldn't fight that if I wanted to, but I'm not buying at these prices because all of the best arguments are on the bear side, all of them. So all I have on my side are a bunch of 23-year-old Robinhood traders.
You have Trump and Robinhood. That's who you have. That's your team.
Hey, that's a pretty powerful 1-2 punch, right? That's a pretty powerful 1-2 punch.
I get it. It's a very powerful punch, but let's realize who's on the team.
Listen,
Trump and Robinhood.
It's what it is, right? So, but in the meantime, there are areas of the market that I feel comfortable. I'm going to feel very comfortable in USO after the expiration of the option thing. I'm still very curious. I mean, like, aren't you just curious to see what happens with those June
I'm very
contracts?
curious with crude
Like
oil.
just from with no monetary investment. Just
I'm not curious in any capacity with USO, but I am crude oil.
Mm-hmm.
USO.
By the way, you know how Mark
3.8%?
was labeling himself a tactical bull, Matt? I actually think he's a tactical value investor through these naked puts, right? I mean, he's willing to take ownership at Delta at $5. That's not bullish. That's value investing at a level you'd be comfortable with the risk assessment. But I mean, we're not going to get into the semantics of that. I understand, dude. I get it. You get a complete sell-off in some of these things you believe are going to last, or you get value where you want it. That's a tactic you've been using for 15 years. So I do understand why you have that approach. But I tell you, I'm going to trade bearish and I'm going to trade bullish. And I cannot miss those opportunities when they do break down, because if we do get this range to break one way or the other, you're going to have a bunch of stuff flying off the radar, in my opinion. Carnival Cruise Lines next, real quick here. I thought this was interesting data I saw out of them. They put out a report that they offered all of their customers either a full refund if they were affected by a cruise, that was during a lockdown, they can't go, all that kind of stuff, or 125% credit for a future cruise up to like 2 years out, I believe. And only 38% of the people took the refund. Now, the news headline was trying to make that out.
Don't question cruise goers.
They'll just go, right? They love it. They're like,
cruises are amazing. Like, I love the water. I get it. I just don't like going on the water and floating Petri dishes.
Mm-hmm.
So
I took a wonderful cruise to Alaska with my family in 2015. I had a great time. I had never been on a cruise before that in my life. I'm not a cruise goer. I've only been on one in my life. So I wouldn't say I'm a fan, but I still think, I don't know, the anecdotal evidence that they were selling stuff in August and people were still holding, I think is far too early to say that we're out of the woods on these cruise lines. There's no doubt about it. I'm seeing the high
CCL. What price, Tim, would you think would be a great price to buy CCL? Like defensive.
$3.
Yeah, that's where I'm at too. $3-4, right?
$3.
Yeah, that's where I'm at too.
Yeah. How much the $3 naked put in June?
I'm just looking at it right now. I'm not getting anything. See, like I don't sell a naked put unless I can get like at least $15, ideally $20.
I mean, you're talking about 70% drop in price. You're not going to get a naked put there.
I got that on AAL though. Then that was with a 60% drop in price by June. So, I mean, sometimes the volatility, but the volatility on the airlines this morning was over 100%,
Mm-hmm.
like like when at the height of the crash in March, you were getting insane. Like on MGM at $3, you were getting 50 cents. Like, I mean, you were getting insane. There's not real fear right now. There's just elevated volatility. But like if you can
there's elevated talk, right? I mean, there's elevated talk. We're concerned about the talk. But when it actually comes to the price action, when you're looking at the S&P 500, we really haven't done anything in 4 or 5 weeks, guys.
No, we're at the same level. I mean, 2,800 we were at in mid-April, Matt. Now we're right there, 2,800, and we're fighting back and forth. And by the way, being at the same level is not good for the bulls, in my opinion.
That's why Mark wants the market to crash so much so he can pick up more credit on his premiums on his naked put.
Of course.
And actually hopefully pick up some shares. It's like that naked put I sold on Twitter. I would like to genuinely pick up naked put right below those March lows. Like, so if I can find a company that maybe it's not rock bottom prices, but above the lows, I just like it as a tactical play. But once again,
I'll tell you when I'm a buyer, and I mean when I'm a buyer, not just dabbling a little bit, not just trading, but when I'm a value buyer. S&P after next leg down 1,500 to 1,800, P ratios expand quite dramatically because price drops, but the value starts coming in. That's when I'm a buyer.
You're so old man Buffett.
Another value investor.
I will take that as an amazing compliment.
You should.
Well, I tried to find the perfect words that would insult you, yet you would take as a compliment.
I'm David Tepper. I'm Warren Buffett. I'm Carl Icahn. I'm all the smart investors.
Listen, and I know
they're not chasing price after one leg down in the front of economic disaster. They're not chasing price there.
Well, because it's stupid to, right? Like it's stupid to. Now that doesn't mean the S&P doesn't go to all-time highs in the next 6 months because blah blah blah.
That's not what it says. I agree.
But this momentum has died out. Like the sentiment is shaky. You get one little nudge out of China. This thing. I mean, listen. It's hard being patient, and this is one of the things.
I believe we have another leg down.
It's been
and
hard.
I believe that leg is going to be worse than the first leg.
And with our pro member community, I mean, we have tried to, each in our own way, talk about discipline and patience, and like, it's okay if you miss out. I mean, you can always trade, right? You can always trade. But as far as that investing aspects of it, it's hard being patient. But man, like, I would rather be patient and make a little bit of money on naked puts and have the S&P go to 3,600. I would rather do that and feel happy about that than to go buy in the face of some of the most ridiculously strong bearish arguments ever and then have the market tank. I would feel stupid. That I knew all of this information, that I saw all of the great bear arguments, and if I chased money in my investment part of the portfolio, I would feel stupid 9 months from now. Like, I don't mind losing money, but I hate feeling stupid. And that's what if I bought today at these levels, I would feel stupid.
After 12 years of price appreciation, everybody should be concerned about capital preservation, not about making money.
Which, by the way, one of the reasons why next week, some of the content we're going to be featuring on the podcast and other areas is how to play insurance, and how to use the insurance market to protect you, man. I mean, how many 401k holders out there or people who got relief out of the rally recently need to learn how to protect just in case. We don't know it's going to break down and take that all the way down. We don't know for sure. Markets can stay irrational. There's no doubt about it. But I know this, every investor who knows how to buy a put option against a long-term investment, just in case they need to hedge, they're a much, much better investor, and they have a tactic that can empower them.
Sell your equity. I'm suggesting buy insurance on it to protect against the what if scenarios. I mean, consumers spend 10% of their monthly income on insurance, car insurance, life insurance, house insurance, whatever you name it. You go to a store, and the last question you always are asked, or do you want to buy insurance? And everybody always says yes. In an environment where we are going to see the worst economic data in human history, if all you ever do is buy equity, you're taking great risk to your long-term portfolio, in my opinion. You should own insurance in this situation 100%. If your financial advisor, if your money management manager, if your wealth manager, whatever creative way you want to call these idiots, if they came to you and they said, hey, listen, the market's recovered 22% off the 36% drop. We're in front of the worst economic data we'll ever see. We're in front of perhaps what could be another Great Depression. Would you like to buy insurance? The answer would be immediate yes. Immediately yes. But yet people who are managing their own money, they question that. And I don't understand that. You want to lose money on your insurance. That's what you want to do. You don't want to die to collect your insurance. You don't want to get in a wreck to collect your insurance. You don't want to to have your home burned down to collect your insurance. Your insurance is there to protect against the what if scenarios. And somebody please explain to me right now how in what other situation that we have ever dealt with that we've had more variables that could impact price. Name me one.
Not one. I can't think of a. Oh,
I
no,
can't think of one.
Listen,
not one. I'm not saying the market's going to crash 50%. That's not what I'm saying. I'm saying it's a variable. It's in the cards.
It is in the cards. It still is in the cards. And that's why you're seeing a lot of, these so-called billionaires talking about, the fact that the reward to risk in the market right now is the worst they've ever seen. I've seen that chatter and that sentiment shift this week, Mark, out of many, many of the big investors on Wall Street who are not buying into
this.
There's
a hurricane forming off the coast of North Africa, a strong wind, strong weather pattern. And now it's literally in the Caribbean, and you have the ability to buy insurance on your home in Florida.
Mm-hmm.
That's what you're faced with right now. That's the choice you have right now.
Yeah.
Now,
yeah.
I'm not wanting to collect insurance. Do you think that there's millions of small business owners that wish their business burned down so they could collect the insurance in this environment?
Dark, bro. I get
dark? It is, but it is, right?
Yeah.
Well, what's funny is I went to get sushi there's this little sushi place that I love supporting. And I went to get sushi a few weeks ago, and they were closed. And the nice gentleman that runs this little mom and pop operation, really nice couple that runs it. And he's like, and there was a fire guy in there, and they were talking, and I was like, you guys closed? And they're like, yeah, one of the businesses next door, it was this little shopping complex, caught fire. I was like, that's bad luck. That's bad luck. There's, on top of everything that's going on. And the fire guy said, it wasn't luck.
Okay.
So, that's the dire straits that so many small business owners, and, we're entrepreneurs. And you just feel for these people that are having their life work impacted. It's got to be a terrifying situation for so many small business owners to be faced with, am I going to lose everything I've been building for 5, 10, 15, 20 years? It's just terrifying for them.
Can I just do a PSA though? We don't recommend arson. Build a profitable business that's not dependent on brick and mortar.
You're going to get caught, right?
Those come on.
Those fire people are like forensic analysts. They'll be able to pinpoint. Have you ever seen those people at work on a TV show or reality show? It's amazing. Those fire investigators, they can pinpoint where a fire starts to the exact space. It's amazing how they have that down to a science.
He must have watched some kind of NYPD fire or something. I don't know. No, actually,
the 1990s great movie. What was it? What was that called?
Was it Kurt Russell?
Kurt Russell was in it. Yes.
Yeah, I know what you're talking about. I can't remember though. Yeah. We got to start. We got to pick up the pace here, and we got about 5 minutes left, and then we're going to wrap. We're going to be talking into our coach's corner right now, where we talk about a few stocks that are on our mind, grabbing our attention, and then we're going to wrap up the show. One quick thing, if you're out there and you are a part of our community, but you don't currently read our Tackle Today blog, give it a shot, give it a look. I've been writing it much more recently. I just dropped the link in the chat. Mark writes a bunch of them. I write a bunch of them. And then every Friday we have a feature where Coach Emily or Coach Marquise, Coach Greg, several different other students are rotating in, Coach Pearl, to write on every Friday. So give that Tackle Today blog a look and go and subscribe to that. Some stocks on my mind here, Matt, just in tech. Some of the tech pullback I am interested in. Take a peek at Facebook real quick.
I am very interested in the pullback, by the way.
Yeah.
Very interested.
I mean, you're in the 920 moving average zone here. I mean, you're 2 red candles down. It's got a little bull flag. It's not confirmed yet, but I'm watching that pullback develop. Take a peek at Google as well. Some big tech names, we're going to be looking at. Same deal. It's a good looking chart. I mean, say whatever we want to say about thesis. That's a good looking chart. Swing traders are going to be interested.
If you remove the pandemic and just look at the technical situation, that is a beautiful pullback.
CRM, I talked about it yesterday, further developing here on Salesforce.
I
like that pullback as well.
I would love a 200-day moving average here. And I love CRM. I love everything about the company.
Another one,
Mark Benioff. Love everything about the company.
3 more on the bull side that grabbed my attention. Intuit, popular company over the last several years. Nice little pullback. You got earnings coming up. I actually did not see that when I found the chart. So that's going to be on the bottom of this list I've been looking at. Home Depot. Earnings coming up on this one. I believe Home Depot's probably been crushing it. I know that's just instinct, but how many people are out there doing home projects right now? I'm going to be watching earnings coming up on this trend. I'm interested in this company coming out of this. If people are going to just reinvest back into their house, do projects.
If the economy does reopen and everything's gravy, Home Depot's a great play.
I mean,
Tim, what was the delay at the dump?
Oh yeah, at the landfill here in Salt Lake City, Matt and I were working on some hardwood flooring project last week at his house, and I called just to kind of check and see how long it would take me, and if they were open, if they had regular hours and all that kind of stuff. It was a 90-minute wait at the landfill, Matt.
And this is an old value investing trick, right?
Mm-hmm.
Where you go and you look at parking lots and see where the stores are full. Mm-hmm. But if there's a 90-minute wait at the Salt Lake City dump, what does that tell you?
People are cleaning out the garage. They're going to be working on the house,
garage, the remodeling, the same thing you and I were doing, right?
Yep.
Okay.
Yep.
So I'm willing to bet that there's many, 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 many other people that are doing the exact same thing. Home projects, that project that, 2 years ago, we're like, yeah, I need to do that, but I don't have the time to do it. Right.
Sure. Yeah.
They're now doing it.
Yeah.
Home Depot, Lowe's, they benefit in that environment.
I think they absolutely do. And then one last one on the bull side of it on my watch list I'm adding is Tractor Supply. And Mark, these are short-term, position style type ideas, maybe even some swing ideas and whatnot, but quick hitters. I like that chart a lot, guys. I mean, we're talking about
off the 9.
That is just a clean uptrend. It kind of fits in the Home Depot thing. We're talking specialty retail, and people are going to get back to business. It is what it is. Bear side on my list. You got to look at NOC. The NOC list. How many days have I've been pounding the table about NOC for a week and a half now. And you know what happened, Matt, is this morning I woke up and I had already missed the trigger fight by about 4%. I was so frustrated. I did some day trading on it, but
got to get that order under support, bro.
Dude, that's a clean breakdown. I'm going to be watching for an intraday rally for a potential new entry, but that is a huge, huge support break, Matty, don't you think? Obviously.
Oh, absolutely, 100%. A close underneath 320 is absolutely confirmation. 300 would be the price target. The problem with NOC and some of these bearish breakdowns that we get is, can you map out the reward to risk ratio necessary where you want to put a stop loss? At this point with NOC, you got to momentum trade that. And for those of you who are new to tackle, that means bar by bar.
Yeah. And couple other ones as well. Coca-Cola recently broke down. So I'm actually looked through and I saw Pepsi. Now, Mark, are they correlated in many regards? Obviously, you got the Coke Pepsi kind of thing. I see a Coke breakdown. Pepsi has not yet. I was thinking, okay, well, maybe Pepsi's going to follow, but maybe they're playing it differently right now. What is the split between those two companies? Why would the one hold and the other one not?
Pepsi's earnings were a little bit better than Coke's this quarter.
Mm-hmm.
I wouldn't read too much into too much of it. I mean, if you're going to have a crash, listen, I mean, Coca-Cola is not a great short unless you're shorting the market as a whole.
Right.
same with Pepsi, the breakdowns, like even when you like saw the initial breakdown of like the 200, you see how it's very, very choppy. It can get really easy to start. They're not great swing trading stocks. They're just not. Like,
Mm-hmm.
No, it's value play. Value plays are never great shorts.
Mm-hmm.
so.
I mean, GE not in that conversation, but yeah, value plays.
Well, then I might trigger you here because I think Disney might be a good short below $100.
You're an evil person.
I am not evil. The mouse is evil. I'm with Mark on this one.
Dude, the mouse is evil.
Look at that. You've got a
The mouse is not
consolidation.
evil. The mouse is cute and likable.
The mouse is evil.
The mouse
Deadly,
is
deadly
cute
evil.
and likable. And
Dude.
Disney's an empire that will come back.
Probably, but a break below 100 is a clean trigger on a swing trade after a momentum loss, and I see
It goes
it.
under 100, goes to 90.
90% of the time, right?
That's the most bearish thing I'll say about Disney.
And then one last one for me, Cigna. I'm interested in. I think these health care companies, health insurance companies.
What's the Cigna symbol?
CI. I'm seeing a split in the healthcare sector, and that momentum shift up here, same kind of pattern I've been watching. Break below 180 to me there is pretty clean, and there's a lot of downside room if it happens. But those are some watch list additions here on charting from me here, guys. Mark, let's get final thoughts. Cody's got to get out of here pretty quick, so let's start wrapping up. What are you paying attention to, and on your end, Mark?
Well, like, listen, I'm dabbling in equities, but where I feel most confident right now are my bread and butter of commodities, gold and silver. I just naked puts on those. I don't know if there's anything I like better, in particularly gold. The new Clorox, I was hoping for a little bit bigger sell-off on Clorox this morning, went down $3 or $4. I was hoping that would trigger something. Clorox, really would love a deeper sell-off on Clorox. Clorox is the new gold for me. And I like oil and natural gas, building a position cautiously, trying to find a way to play the stabilization of price and cash flow at the next 6 months. And then just being patient on equities.
Between 150 and 160 at natural gas, though. So much evidence.
Mm-hmm. It's first support.
All right, so I'm going to sell a put, then UNG on the game. I'm going to go sell a $8 put, Tim, for our game on those June contracts. Just filled it. $8.
Hey, listen, maybe we should up it a little bit. You got DraftKings earnings tonight.
Ooh,
yeah.
About this, bro.
I mean, here's the thing.
But here's the problem with DraftKings, right? Like,
oh, don't you start with the problem with DraftKings. You were promoting them like you were a paid spokesperson a week ago. No way. You're not getting away with the problem with DraftKings. You believe it or you don't. You want to own it or you don't. Are you selling a naked put on DraftKings?
All right, let me find a price level to sell a naked put on.
I mean, you can do the one day.
He gets put to it and just bitches and moans for the next 2 months about it.
I can get the June 15.
Forget June, May. You can get it in tomorrow, dude.
Yeah, but I got to get it at 22.50. You guys are trying.
Oh, now you're widening out the time frame.
Hold on 1 second.
Are you a believer or are you not?
Dude, I don't know if there's going to be football.
Oh, now you're changing your tune. Okay.
Hold on 1 second. I'm selling. Screw it. Screw you guys. I don't care about money.
I knew we could talk him into it.
I'm selling the 15 put. I'm doing it right here. I just sold it.
He does not have the ability not to do this, by the way.
I sold the 15.
You question him in any capacity, and he's going to do it.
15 strike.
I sold the June 19s, 36 days out, 15 strike, got $31 for it. Screw you guys.
Hey, listen, I'm
enjoying that when DraftKings is at 8.
And I'll buy more.
You're insane.
Okay. PSA disclaimer: do not invest out of spite.
The most I can lose is $1,469 on that.
He would rather lose that $1,400 than to be proven wrong. He would rather do it.
No.
Right.
DraftKings, June's. 15,
come back tomorrow.
Strikes.
That is insane in front of earnings, and nobody else should do it. By the way, we just goaded our brother into do it. That's a
crazy thing.
Let me tell you what the earnings are. They're terrible. Like every other company's earnings are terrible and nobody cares. DraftKings, USO, it's all going in the Matt Quora ETF.
You should be paid by DraftKings for this.
Listen, DraftKings, I'm telling you right now.
You should go to DraftKings and get a marketing plan for how much you've been pitching DraftKings.
DraftKings, give me a t-shirt, DraftKings, send it to me. Your stocks, DKNG, 15 puts.
He doesn't need money. He needs a t-shirt.
You know, by the way, Coach Frank, who's going to be here tomorrow, always on Friday Fun Day, which is Frank the Tank Day, our breakout king. He says call activity has been high. Lots of speculators are on your team here, Mark.
Oh my goodness, that is not a bullish argument, by the way.
Oh, all right, guys, that is our show. We will come back tomorrow, break it all down for you. Always have a lot of fun coming on in here. If you're watching for the first time, click the subscribe and the bell. Come back and join us each and every day. And if you've been around with for a bit and you're not a member of our pro community, here's a real simple offer. It's 15 days for free. I dropped the link in the chat. It's also in the comments in every one of our YouTube posts. Come and see what we do. 15-day trial. There's not a thing to lose on that. And I know that you're going to love it. We have a lot of great content, reports, webinars, all kinds of things. And we do have our cash flow club tonight. And I believe that's Coach Gino. Guys, we are out. Great job today, everybody. We'll see you tomorrow.